welcome everybody. I was just going to give you a quick introduction to myself. As you heard, Allan Wilén, I'm the Economics Director at Glenigan. What I was going to do now for the next half an hour really is give you our analysis of current industry activity and particularly the prospects for 2015. I'll be drawing extensively on Glenigan's own data. We've got an extensive project database of projects across the country, both under construction and obviously in the development pipeline as well. And so I'll be drawing on that together with other industry and economic data, really try and give hopefully a useful assessment of where things are going. Before I go into individual sectors and industry performance as a whole, I think it's useful to get a recap of what's happening in the wider economy. I'm not going to go quite as far back as the Minister, talking about sort of the crash, although that is on the graph there in 2008. But I think there are some interesting things. If you look at what's been happening in wider economic activity, you can see there's been quite a divergence as we've emerged from recession. The public sector itself is still very much constrained, in part by the government's own efforts to try and curb the deficit. So we're seeing weak government consumption. That's on the bar there, so the sort of the red bar on the graph there, and also a sharp decline in public sector investment. When the current government came in, they stuck with the outline plans inherited from the last government, which was to cut business construction, investment generally by the public sector by 30%. And you can see that in the very sort of depressing light blue bars there on the graph. So you've had that quite a sharp squeeze there. At the same time, the overseas trade balance hasn't really deteriorated, but it hasn't really contributed much to economic growth. The real growth we're seeing, the real driver that's pulling us out of recession has been the private sector. Consumer spending has been picking up, and we've seen a progressive strengthening there over the last 3 years, and we'll see. I'll look at that in a bit more detail as we go through the presentation. But the other thing that's quite striking has been business investment, which is the gold bars there. And again, we've seen quite a sustained recovery there since 2010. And that's perhaps not quite the perception that people would generally have, actually, that it has picked up quite so early in the recovery and been coming back. This is looking at the investment overall. You can see the dark blue, the light blue sort of bars there at the bottom. That's business investment. You can see that's actually been the whole thing that's been lifting general investment in the UK economy really since 2010 onwards. And so there hasn't been that much of a perception of that. It's been progressive until about the last year, and then there's been a clear acceleration in that growth. And alongside that, there's also been a strengthening in the housing market and in investment in buildings and housing. And again, I'll come back on to say in a few minutes to talk about that. But the output of that really is that we've seen it's supported really a quite positive growth in construction output and starts. Certainly in 2014, starts were sort of recovering prior to that. We saw 8% growth last year, and we're looking for a similar pace of growth this year. And we were looking at about a 5% growth in the volume of construction output this year. And our projection is a similar pace of growth as we get into 2015. And you can see that from the graph here, that why that's now coming through. Because we've got that strong business investment, that's been helping to egg things on perhaps more than they would have done otherwise. But typically you'd need a 2% growth in GDP, which we've now got, and the growth for the next couple of years is a very strong growth. We're looking at about almost 4% growth, about 3.25% growth this year, 3% growth next year, and about 3% almost in 2016 in terms of the wider economy. But behind that, we've got that strong business investment coming forward. Certainly the government's latest forecasts, which are a little bit old, they're from the budget, you can see very strong, substantial 8% per annum growth in business investment, pretty well over our forecast period and beyond. And if that does come through, that does bode very well for construction. We can expect some really strong key growth as we go forward over the next few years. That's the good news. Whilst we've seen that strong growth in the business side of things, the public sector side still is going to be constrained. The government at the moment is planning to perhaps take the brakes off a little bit. Again, its projections for its own investment post-election is for modest growth. But at the same time, it's planning to cut back on its general spending. And I think there must be some downside risks here, that whether that's going to be deliverable over that period. But as I say, even with that, you're looking at quite a constrained picture. And certainly, if you look at what's been happening in some of the key construction-related areas, you can see that message coming forward. If we look at social housing, for example, you can see that private government spending split coming through. Student accommodation, which is increasingly being funded by the private sector, has been a real growth area within the sector. You can see from the graph there on the left-hand side some very rapid growth coming forward in student accommodation in terms of project starts up into 2013, and that has continued into the current year, and we've seen a further strengthening in detailed planning approvals in that area as well. There's a lot of investment coming forward, both by the institutions themselves and by private developers looking to tap into that market. So that would remains a positive as we go forward. Against that, the sort of more the bulk of it, the more social, affordable housing sector, has fared less well. It's very much been a mixed bag, and I think that's going to remain the case going forward. The minister mentioned how he'd put a lot more into. The government had sort of increased the number of units being provided, and how they had high expectations of further growth over the next few years in terms of the delivery. We can't quite see that coming forward at the moment in our figures, certainly for the next few years. There's been a lot of structural change going on in that market. Whilst the government is trying to deliver the number of units, it's also at the same time been reducing its funding. And you can see the hiatus that actually came through during the middle of the current parliamentary term, as it switched from providing and supporting social housing developments to more affordable rented accommodation. There was a clear disruption there, and that has sort of filtered through into projects on site. It has picked up over recently, mainly because under the new scheme there have been more and more projects coming forward, in particular sort of a year or so ago from the housing associations. They were starting to tap into the new regime, and bringing forward and finding funding themselves to take projects forward. A lot of their own funding and private funding coming forward to take new schemes forward, perhaps changing the structure and the composition of those schemes with return for homes for sale and shared ownership schemes, really to try and cross-subsidise the delivery of affordable rented accommodation. But that does seem to have petered out, and we're looking at a sort of quite a weakening going forward. There's been a sharp drop in detailed planning approvals during the course of 2014, around 21%. And I think that's signalling a retrenchment in project starts. Both this year, it's down about 6%, and we're looking at a further sort of 11% drop in 2015. So I think it's going to remain a sector that's going to be relatively constrained because of that squeeze on what is the bulk of the sector, the affordable housing element. Similarly, when we turn to health, again, not such a good picture going forward. Again, the sector is also under pressure from funding. Overall NHS funding, the government has ring-fenced the amount of funds available, but the capital funding side has been squeezed. And as you can see from the graph there on the left, there's been a steady decline in the detailed planning approvals over the last few years, and that's continued during the first 10 months of this year. So there has clearly been a squeeze coming through, and we can see that coming forward into a decline in project starts next year of around 12%. This year has been buoyed. There's been a few sort of larger schemes that have come forward and helped to offset things a little bit, but we think it's going to be a sector that's going to remain under pressure as we get into next year, unfortunately. There is one government-funded area that actually is looking a lot brighter, and that is education. And that's for a number of reasons. One is rising demand. The number of primary school pupils is rising steadily by around 10% at the moment, and whereas the secondary school numbers are actually falling. And that's put a lot of pressure on the existing estate. So a lot of local authorities are having to come forward to develop and particularly extend and refurbish existing primary schools. And that's generating quite a lot of work. We see that remaining a positive area going forward, particularly in the large metropolitan areas. I don't know if people saw there was a news item yesterday on the news which has actually put that into contrast. They're looking at Shropshire, where they've got shrinking numbers of pupils in rural areas and having to look at how they handle that. But at the same time, in the major metropolitan areas, very rapid growth in pupil numbers, which they're having to accommodate by extending and thinking of a whole range of variety of ways to accommodate those numbers. And that's really helping to particularly boost, as I say, the primary school estate work. But it's not just coming through from that. There's also the government's own free school programme that's helping to add to supply. And there's a number of other areas as well, one of which is the government's priority school building programme, where they really are perhaps trying to catch up with some of the disrepair that was left in the wake of the sort of demise of BSF. That's been a bit disappointing with the pace that it's taken up. I think there's only around 42 or so schools that are currently underway. And they've got a target about delivering about 270 by 2017, I think it is. So potentially there could be quite an upturn in the pace of growth coming forward in that sector. Finding the funding for that's going to be a challenge. One of the ways they were going to try and deliver that was with PF2. And again, that's been an area of disappointment. The private finance side of things hasn't really come forward as hoped. But nevertheless, I think that's going to be a positive going forward. The other areas, again, it's coming back to universities. And again, it's perhaps more pressure from competition. A lot of the universities are trying to draw up new recruits, new students, particularly from overseas. And they're trying to make sure that they can attract and compete against each other and actually in international markets by ensuring they've got top-notch facilities. There's a lot of development plans coming forward, either for new facilities or even in the longer term new campuses from a number of universities. So I think that's going to be a real positive area going forward over the next few years. As a result of that, we're looking at a pretty positive picture, certainly for 2015. We've got growth around 16% in project starts coming through. And again, obviously that's going to feed through into construction output in that sector. And it gets better as we go forward, actually. We're now looking at the more positive sectors. Civil engineering, again, has been an area that's actually, we've seen sustained growth in this area since 2008. And the potential for further growth is quite clear. We've got things like the Infrastructure Fund and Infrastructure UK, where they're really trying to target and attract more investment into the UK's infrastructure and utilities sector. And the need there is quite pressing, particularly in terms of energy supply and improving transport links. There was a recent report that identified a £60 billion shortfall in this area and also highlighted the fact that actually investment in infrastructure is a real key tool to generating stronger economic growth in the UK. And it was actually, and is also potentially the lack of investment is also a potential barrier to productivity growth in the UK. So I think that's something that the government has largely taken on board, but is also largely looking to the private sector to fill that funding gap. Yes, there's some more positive signs in terms of roads, where they're reorganising the highways agency, and there's plans there to try and step up investment, particularly in widening the motorway network by using hard shoulder running and sort of intelligent systems to try and monitor that. But it's really on the areas such as rail and energy, particularly by tapping into private finance, that they can see a lot more investment coming forward. Now, there are some big projects coming forward, not least now Hinkley Point has been given all the relevant green lights and is going forward. But in other areas, energy, I think, is going to remain a priority area of investment. There's going to be a lot of projects coming forward over the next few years. And with rail, obviously things potentially post-election, things starting to move forward on HS2. And others. But in the nearer term, we can see some further sustained growth, about 8% rise this year, following a 7% rise in underlying project starts, which excludes those larger schemes, and a further 9% growth in prospects for 2015. So very much a positive sector and one of sustained growth, both in recent few years and over into 2015 and potentially into 2016 as well. And I think that kind of sort of draws us back to the private sector. And so if you look at private sector demand, some interesting things going on there. I mentioned consumer spending as being a major driver for wider economic growth over the last couple of years and helping to draw us out of the recovery. And you can see that from the graph there, that private consumption, the red line there, has been moving forward. The interesting thing is it's been moving forward ahead of real earnings growth from households. There's been a number of reasons for that. While average earnings haven't been rising so rapidly, there's been more employment. And that's helped to support that rise in consumption. Also, consumer confidence has been coming back. But to what extent is that going to be sustainable over the longer term? I think you're going to have to see some closing of that gap. And certainly the current forecast suggests that that's going to happen from next year, that we're going to see the growth in private consumption and real earnings moving closer together. And I think it's going to be quite crucial that it does, because I think that's going to be a real key for making sure we do have sustained growth. After all, consumer spending is half of all of the UK economy. So it's the pace of that pace of recovery that's going to be key, both for the wider economy, but also for particular sectors like housing RMI, and a lot of other consumer-facing areas such as retail. But as I say, that there's a clear risk there that we don't see that. Certainly, real earnings haven't come back perhaps as we had expected in 2014. And so there is a real risk that actually we could see a dampening in that area going forward. But on the current projections, we are fairly positive. We do see that coming forward both into 2015 and beyond. And that should have a real positive impact on key areas, particularly on housing. If you look at the wider housing market, you can see there's been a general pickup over the last few years. We were out of the depths of where we were in the initial economic downturn, and we've seen a strengthening in both mortgage numbers and actually house price inflation's been picking up over the course of last year. Recent months have seen a bit of a slowing in that area and a dip in the pace of inflation. A number of reasons for that. There's been a tightening up on the mortgage lending rules. I think it clearly has seemed to have affected the flow of mortgages coming through the system and then into the wider housing market. And that reflects concerns really at potential overheating coming forward, particularly from the Bank of England, and also the prudence of some of the lending that was coming forward. In addition to that, there's been a few knocks to confidence, not least particularly in particular markets such as London. The mansion tax proposals clearly have had an impact, particularly in the prime residential market. And that has a particular implications for London generally, because unlike the rest of the UK housing market, which you need the first-time buyers to come in to drive activity in the wider housing market. For the last few years, London has acted quite differently. It's been the rich Russian oligarchs and others coming forward, moving into the UK, coming into the top of the market. That's actually rippled down. That spending has rippled down and driven the rest of the market up as a result. Now, obviously, there's less Russians coming over for one reason or another. And there's been perhaps a lot of wariness from other investors at looking at the top of the market, top end of the market, and seeing perhaps London as a safe haven. And certainly talk of the mansion taxes having a dampening impact in that area. And that's going to have some interesting implications for what happens in terms of new housing activities go forward, because picking up on the Minister's comments, really, yes, we have seen an improvement in residential planning approvals and their success rate, really, of applications post the government's planning reforms. Since MPPF has come through, there has been a step change in the success rate of planning approvals. And as I was saying to the Minister, you can see that step change coming through, but the smaller schemes in particular still have a far lower success rate than the larger schemes. So that's perhaps an area that can be addressed going forward. The net impact of that, plus the fact that there have been more applications, there's been more confidence in the market, is you have seen quite a sharp jump in planning, the number of units being approved. And it's been across the country. Clearly, house builders have seen that there is a prospect of a widening in the housing market, coming back to the point that the government support in terms of help to buy has really been effective outside of London and the South East, helping to support demand. And house builders have been responding to that. There have been more applications across the country, particularly in the Midlands and the north of England last year. This year has seen quite a sharp jump in the first half of this year in planning approvals in London. But most of that's attributable to some very large projects, not least the Earls Court redevelopment scheme, which is a long-term scheme for about 6,000 plus units. So that's going to be built out over a number of times. And again, coming back to the current sort of dampening in the London market and unease, particularly at the top end of the market, a lot of those London developments have been high-end residential. The pace that they get built out, there must be a question mark over that now, given the fact that that market is perhaps cooling a little bit, whereas the rest of the market is actually looking a lot stronger. So don't get fooled by what's happening in the capital. Obviously, a lot of the media attention is inevitably going to be on what's happening at the top end of the market as well. That has been for a number of years operating very differently from the rest of the UK, and the rest of the UK is now looking a lot brighter going forward into 2015. As a result of that, we've got we've seen 3 years of growth, and we're looking at further growth as we get into next year. Rising households are going to be key to that. Rising household incomes will be key for that. The confidence is certainly coming back. I've talked about the mortgage availability. That has improved. They're clearly been tightening up on some of the rules, but nevertheless, it has clearly improved. So it's a positive picture going forward. That doesn't mean there aren't any risks to that in terms of what's happening into the wider housing market, but also in terms of the industry's capacity to deliver. But I think the positive from it is that whilst there's a lot of concern from the government, from the bank, about potential overheating in the housing market, hence the tightening of the rules, actually new housing supply is seen as one of the long-term solutions to tackling that. It's only through increasing oversupply in the long term, and I think Labour has taken exactly the same view, strategic view of housing supply, that actually you've got to increase new housing supply really in the longer term to actually cap excessive overheating in the housing market, and that's the sort of boom bust that we've seen in the past. So that is a positive, I think, in a positive framework for the longer term as well as for 2015. Moving away from housing and looking at the sort of the non-residential sectors, taking retail construction first. Again, a bit of a mixed picture going from there. Retailers have seen a recovery in consumer spending, having been very hard hit for many years by the recession. But at the same time, there's quite a lot of structural change going on in the market. Not least, there's the impact of the internet on retailers' activities and their demand for retail space. So what we're seeing is that as we come out of the recession, there's clearly an overhang of vacant properties and floor space, particularly the secondary and tertiary floor space on a lot of high streets, which is, there's going to have to be some sort of solution to that. A lot of that may never come back into use again, really because there's quite a lot of structural change going on in the market. People are shopping in different ways as a result of the recession. Supermarkets have been perhaps the first to react to that. They've been refocusing their efforts actually towards the high street with their convenience store networks. We've seen a lot of activity going forward over the last few years. But they too are now under pressure as a result of the supermarket war and the impact and encroachment, both from online delivery services, but also from the deep discounters at the same time. So they're being squeezed. They're rethinking their plans, as are a lot of other retailers. They're reshaping how they look at how they're using their retail space, how they take on board online sales, how they incorporate them into their own business model through the click and collect developments. And as a result of that, we're going to see some sort of refurbishment of existing stores coming forward. Coming back to the supermarket side of things, you can see that shift that's happened in terms of their own planning approvals and their own development pipeline over the last few years, particularly Tesco's, but Sainsbury's have been following suit as well. They've been scaling back on the amount of floor space they've been bringing forward for development. When we got full year data for 2014, I think you'll see a further contraction coming forward there. Furthermore, a lot of that stuff hasn't actually been built out as well. There's been a lot of reassessment of their development plans over the last few years, particularly over the last year with profit warnings we've seen sort of emerging from Tesco's and Sainsbury's as they've been squeezed by the likes of Aldi and Lidl. And actually, if you go back to that graph there, the one area that is perhaps growing quite strongly at the bottom of that graph is the development programme from Aldi. And they've recently announced that they've got further plans for a further acceleration of that development pipeline. So you've got a bit of, in the supermarket sector, a bit of divergence. The big four moving towards C stores, scaling back on their development plans. At the same time, actually, there are more supermarket projects coming forward from the likes of Aldi and Lidl over the next few years. But not enough to fill the overall development gap. And certainly if you look at where project starts were last year, you can see that supermarkets counted about 40% of the sector. But if you go back to, say, 2011, it was 2/3 of the sector. So that contraction has already been substantially underway. And you can see that coming forward, actually, in some of the gaps in terms of detailed planning approvals and starts. Having said that, I think we are now looking at a more positive picture going forward. The data I'm tracking there, I've advanced the detailed planning approval trend by 6 months to give an indication of where that's going to be taking starts over the next 6 months as we get into the first half of 2015. And you can see there is an uptick in prospect in terms of project starts during the course of 2015. And that's very much been going to be driven by increased investment in the high street by high street retailers refurbishing and redeveloping their own stores, particularly to accommodate click and collect. But there's also some larger projects that are now in prospect as well, particularly on the shopping centre side of things. In terms of, perhaps particularly in response to the online threat, a lot of developers are looking at their existing shopping centres, trying to extend them further to make sure they've got their suitable gravitas, really, to attract significant footfall. In particular, they're trying to increase the leisure element to make sure and to lock into that footfall. So you're seeing a lot of schemes coming forward in Glasgow, extension to Westfield in White City, and Croydon, for example, are all schemes that are currently either in development or on the sort of the drawing board. And I think we'll all be contributing to growth into 2015 and beyond. So as a result of that, we're looking at a sort of a 12% rise in underlying project starts during the course of 2015, having sort of dropped back by about 8% this year. So it's starting to move forward again as we get into next year. And in addition to that, as I say, there's a potential contribution from some large £100 million plus schemes into overall sector workload as well, as some of those big shopping centre developments get underway. Another area we've seen actually relatively flat performance over the last 3 years, but I think now things are starting to look a lot better, is on the hotel and leisure side of things. Again, it comes back to consumers in terms of particularly discretionary spending. We have seen a sort of revival in confidence, but actually spending power has been relatively constrained. I think as we go forward, actually, I think that's going to start to as confidence comes back, as real earnings growth comes back, we'll see more discretionary spending flowing through. In addition to that, a key element to this is overseas visitor numbers, and again, they've been picking up, and we're going to see more projects coming forward. If you look at overall detailed planning approvals, so far they've been pretty flat in 2014, but there has been a sharp jump in the capital in London, and I think that reflects London's preeminence as a tourist destination. So we're seeing more investment coming forward into the leisure facilities, hotel facilities in the capital. But I think as we get into 2015, we'll see a wider strengthening in development pipeline across the UK. And that's going to very much reflect, obviously, the tourist numbers, but also a rise in household discretionary income flowing through and in improving investor confidence. So we're looking at probably an outturn of a growth of around 10% as we get into 2015 in project starts. So a positive area going forward. Similarly, with if you look at moving on to the office accommodation side of things, a positive story. If you look at demand for accommodation, that's on the rise. The financial sector is still fragile, but other sectors, particularly business services, have seen strong growth. You can see this from the graph there. The sort of professional service side has grown very rapidly over the last few years, and that's generating increased demand for accommodation. Most of that initial growth in demand has been in the capital, but that's now moving out to other parts of the country. So we're looking at a much stronger regional picture going forward. Certainly, in terms of looking at project starts for this year, it's been a bit of a pause. After strong growth in 2012 and 13, we're looking at 8% rise in project starts this year across the UK. But the demand for accommodation and the availability of accommodation is tight in the capital, but it's also tight in key regional centres across the UK, and that's going to be generating a lot more investment going forward. So we're looking at a 23% rise in project starts as we get into 2015. A lot more investment coming forward into this sector. And finally, I just wanted to touch on the industrial sector again, which is a positive area going forward. UK manufacturers still under pressure. We've been slow to recover from the recession. If you look at overall output, it didn't fall quite perhaps as sharply as it has in some previous recessions, such as 1979-82 recession. But we have yet to really to pull out from that. We're still about 4% below output peak. It's 5 years on. But confidence in manufacturing has been coming back. Increased concerns about export prospects, but a lot more positive about domestic demand. Certainly looking at a number of business surveys. So that's a relative positive picture. But the real demand over the last few years hasn't actually really come from the manufacturing side. It's been much more from demand for logistics space. And again, a lot of that comes back to the growth in the internet side of things and the online delivery networks being developed by the retailers. So we've seen a very strong rise in both in terms of detailed planning approvals. If you look at 2013, a very sharp jump there. And that fed through to a very strong rise in project starts this year, almost 50% in terms of the value of projects starting on site, which will continue to boost output as we get into next year. And we're also anticipating a further, more modest, but obviously from a much higher level growth as we get into of almost sort of 20% as we get into next year in terms of the value of projects starting on site. So it's still a very positive area as we go forward. So quickly to summarise, I think it's quite a divergence in the economic prospects. I think the government sector side is still going to be clearly constrained by overall government spending and the need to tackle the deficit. But within that, there are some bright areas, and I mentioned education as a particular bright area. But it's going to be the private sector that's going to be the real key driver for growth over the next few years. It's been leading us out of the recession, and it doesn't look like there's going to be any change there, but we're looking at a broader housing market recovery in 2015, rather than perhaps the sort of London-centric recovery that has attracted a lot of media attention over the last year or so. And similarly, in terms of the non-residential building side of things, again, a broader recovery in retail, which again will be across the UK, a moving of the recovery in the office sector, again out of the capital across the UK, and a rising in industrial activity. And all of that alongside further growth on the civil engineering side of things. So overall, we're looking around a growth of around 8% this year, and similar growth, around 7.5%, as we get into 2015. And as I say, very much driven by the private sector. All of this is covered in a little bit more detail in the reports that, as Rob was saying, will be available after this. But at this point, I'll hand over to Julian. Okay.